Welcome everyone to Crypto Sunday. We're going to check out what the crypto markets have been doing in the past 24 hours. We're going to look at the key structural levels. Right now, the crypto market is experiencing its own little bull run, with Bitcoin up 1.29%, nearly 12% for the past week. The standout is undoubtedly Solana, up over 35% and up nearly 11% in the past 24 hours. The top gainers in the past 24 hours: Chainlink, Aptos, Rune, Solana, Phantom, Pepe, LDO, Matic, Axie, and Synthetics. The greatest losers: top 100 past 24 hours: KCS, Rocket Pool, USDP, HT, PaxG, XRP, DAI, USDC, USDD, and USDT. There's a lot of stable coins in the top losers. Please let me know in the comments, what does this mean? It's very good to track the stable coins, either the greatest losers or the greatest gainers. We've seen a lot of short liquidations across the past 24 hours, and being weekend trading, this is way in excess of what we usually see. You can see about 53 million in total liquidations, around 20 million long, 72 million overall. And you can see when a short liquidation is shown by this heat map, it's a red area, which means, the price goes up. Wow, I think they should change their color code. And over the past 12 hours, a lot of short liquidations, a lot of shorts across the past 4 hours, and still a lot of shorts getting liquidated. Not surprisingly, the Crypto Fear and Greed Index is turning positive. There's a lot more optimism inside the crypto market. All financial markets are incredibly volatile, but crypto is especially so. That's why it's very important to know the CTKS structure across the Tier 1s, the Tier 2s, and the Tier 3s. CTKS structure represents total market structure. It's not recent indicative price. And you may say, what's the difference, Ken? It's huge. As we go through, I'll explain why. The CTKS code is how we do our daily three-dimensional risk management. We're never caught off guard by anything because we know the market can move in one of three directions. And in a 24-hour period, it can move in all three. That is, up, down, and nowhere. We know we control the trade or investment, but the market controls the return. We must move with the market, with knowledge and with courage. It's critically important we look at Bitcoin because Bitcoin's gravity impacts all of the alts. If Bitcoin is going up, the alts can go up much faster, much further than Bitcoin. Why is that? It's because Bitcoin has such a high market capitalization relative to the alts. Bitcoin's gravity is represented by that blue line. You can see as Bitcoin went up, what did Ethereum do? It went up as well. What about Binance Coin? Yeah, it went up. What about XRP? Well, there was some really interesting news about the SEC dropping cases against the founders of Ripple. That literally gave a momentum to the entire crypto industry, and it followed in suit. Why was this so pivotal? The XRP case has been very, very important to the crypto space. The SEC is attacking Ripple XRP, and it's failing. That is, the SEC is losing case after case after case. One thing, people are pointing to November the 9th as an appeal date for the SEC. Don't believe that. John Deaton said it can take months and months and months, maybe even 8 or 9 months. Things move incredibly slowly in the legal system. We can see Solana has done incredibly well, but it's moving in alignment with Bitcoin's gravity. This is important to understand. What about ADA? ADA is also getting through, and ADA has had some really stiff resistance. Doge, you can see Doge price is very, very suppressed. I'll actually explain why, and you can see it structurally when we get to the chart. And Tron has been doing okay, not too badly, but Tron generally shines in the dark. In all probability, Tron will drop out of the top 8. From a relativity perspective, you can see how the variation is occurring between Bitcoin's gravitational pull and Ethereum, Binance Coin, XRP, ADA, Doge, Solana, and Tron. So far, Bitcoin has been doing pretty well, except for the exception of Solana. But we know the smaller alts just go nuts during these times. That's why I showed you crypto bubbles at the start. One of the things that we need to look at is total crypto market cap. Total crypto market cap is literally the movement of the entire crypto market, Bitcoin, Ethereum, and all the alts. Total crypto market cap has been trading around 3,500 days. If we mark up price action, support and resistance lines over the past couple of weeks, that means it's a fraction of 1% of the actual price history, and that renders it statistically obsolete. That's why the CTKS method was invented, to solve the statistical challenges that occur with technical analysis and price action analysis just in general. Just zooming in on this recent price action inside of total crypto market cap, let's just pop on the indicator. We can see that very, very heavy resistance level at 1.127 trillion, look at that, price came up and was rejected. This is a very serious level of resistance. It's not a stock standard level of resistance. A lighter level of support exists at 1.115 trillion. Also down a little bit further at $1.113 trillion. And you can see when we got above these resistance levels, that acted as a safety net, that acted as a ceiling, and that is a pretty tough ceiling to get through. And this is why the entire crypto market cap is all the alts are backing away from that level because there's so many sellers there at the current time. And you can get this indicator by visiting ctksmethod.org. Turning now to Bitcoin, we understand that the total crypto market cap, or total crypto resistance inside the crypto market, has been very heavy around this level if we were to parallel it to Bitcoin. What does that mean? The sellers will take control around those kinds of areas. You can learn the CTKS method yourself, and I really urge you to do that. Let's pop on the indicator from the monthly service. What do we notice? There is a resistance line here at that 3219 mark. There also is a structural support at the 27,731 mark. On X, Twitter, yesterday, I was explaining this 29,731 resistance level, and I was explaining if we can get above there, we're heading to 30,219. That's actually what occurred. There's a lot of positive momentum and really good news. Inside the crypto market, there is a definite flight to safety out of the main markets. That doesn't mean that they are decoupling. A lot of people talk about the decoupling of the stock market and the crypto market. Please don't think in that manner. What you have is exogenous events that just basically shock the two charts out of alignment. But they have gravitational pull, and they always shock themselves back into alignment too. I'm specifically talking about the S&P 500 versus Bitcoin. The key here is to understand that these two numbers, this indicator, wasn't formed by just looking at a couple of days worth of data. It crunches 5,096 days. And to the people who know the CTKS method, it does a lot more than that. The concept is these are not just random lines drawn up, they're statistically significant lines, and that statistical significance makes a huge difference. Looking at all of price history is what the CTKS method does. When we look at Ethereum, it's been trading for around 2,965 days. Therefore, when you pop on the monthly service indicator, these lines are drawn from that basis. And where are those particular resistance lines? There's one at 1645. There's a quite strong structural support level at 1624, and there's one down lower at 1605. It's very straightforward that you cannot estimate where one chart is going by just looking at that chart. That sounds a bit nuts, because that's the way people do things, but after all, about 90% of people lose money and get wiped out. Inside financial markets, an unfortunate thing. That's because they don't stack probabilities, and that's what we're here to do today. You can already see total crypto market cap is pulling back. Bitcoin is pulling back, Ethereum is pulling back as well. This is not by accident. The CTKS method is the world's most powerful smart money buy and sell level detection system, and it's not easy to figure out why. For example, with BNB that's been trading since 2017, it's been trading for 2,258 days. I've zoomed out a little bit more here because I want to put on the monthly service indicator, and it's a monthly service because these lines change each and every month. That's due to ODMS, Objective Dynamic Market Structure, which is part of the CTKS method. One thing that you will see right up here, this 216.81 mark was a structural resistance level and it rejected. This particular level at 215.20 is very, very important. That 215.20 mark is really tough, and Binance Coin is starting to get above it. That's terrific news. But the concept is, if price doesn't get above, it's going below. So far, we're seeing very good positive momentum inside of Binance Coin. That speaks very well as to what could happen with crypto, all of the different projects. There's another structural support line just here at 214.65. You can see that line is an important line as well. When price came down, it was caught by that structure. You might notice there's another structural line right here which caught price as well. When you're a trader or an investor, it's important, it's vitally important to know where these structural levels are, because if you don't know where they are, you just guess as in terms of where the structure is, where price can come down to. For example, if you're up at this 216.81 mark, you know that that was very important structure at that 215.20. The fact that it went through, pinged off one support, got resistance, and then made its way down, you already know it's coming down to 212.07 and the lowest support at 211.41. Fortunately, it didn't make it all the way down there. The 212.07 mark actually caught price. This is how you interpret SLs or Stanfield levels across every price chart. It doesn't matter that you're looking at BNB, you've got to get the feeling how to use these levels. They're vitally important. Another thing that could really help you out, notice the price tried to get through this resistance when it was back here at that 211.41 mark. It was rejected, and then it powerfully went up through and retested. Where is it heading? To these lines. Where is it heading if it gets through to this line? And this particular resistance is very, very strong. You can always get overshoots, and that's neither here nor there. They're very, very common, as undershoots are as well for negative price momentum. But to know that there's very strong structure right here that's starting to be turned into support gives a very positive case to Bitcoin and all of the other alts. This is called stacking of probabilities. Professional investors and traders stack probabilities. They know the tier 1 charts because they're vitally important. They're literally the engine of financial markets globally. If the engine is spluttering all over the place, that is not so good. So far, we've looked at Bitcoin, total crypto market cap. We've looked at 2 of the tier 1s. We've also looked at Ethereum, which is a tier 2, and Binance Coin, which is a tier 3. Let's keep on stacking probabilities. When looking at XRP that's been trading for 3,698 days, if somebody says, I'm going to draw a line from here to here, and that's the most important resistance line for XRP, you can say, you're nuts. That's statistically insignificant. But the real question is, why are they nuts? Because when we look at this particular price action, let's just extend this here. Let's just be a bit more generous. 1 day and 17 hours. Let's make it 2. Let's round up. Grab your trusty calculator. 2 divided by 36.98. 2 days into 3,698 days. Wow, that's a really small number. Let's get a percentage and multiply it by 100. Wow, that is so tiny. It's 1/20th of 1%. What does this actually mean? It means that if you take 1/20th of 1% of the price action and you make really big decisions based on 1/20th of 1% of price action, you're going to get smashed because it's not real. The difference between retail and professional is often night and day. It doesn't matter what you look at. You could look at a tennis player, a professional tennis player, and just an amateur player or a hobbyist. They're completely different. They've got different mindsets, different levels of commitment. A professional chess player and just a chess player that plays for fun. They're miles apart in terms of attitude, effort, commitment, all sorts of things. And you could think about your favorite sport as well. It's the same thing when it comes to chart analysis. When we zoom in to recent price on XRP using the monthly service indicator, which encounters all of that analysis across those nearly 3,700 days, what are we seeing here? The current price of XRP is above two structural levels, and that's looking really good. There's a lower one here at 52.16 and a lower one here. And when you get the indicator, you just zoom in to the specific line to get the value of it. We can see that XRP has a lot of underpinning structural support. It has light resistance at that 52.67 mark, the 52.72 mark, and the 52.90 mark. All in all, XRP is looking really good. It's being supported. So when we stack probabilities, BNB looking good, XRP looking good. Let's hop quickly into Solana. What we can see is Solana is coming up to some very steep structural overhead resistance at 30.96. We also know that Solana has been dealing with all of this to get through. Solana will become tired at some stage and will give the other alts a chance to shine, and this is the way that it always works. Typically we've seen ADA and XRP lead us out of bottoming Bitcoin price action or staged rallies. Things are moving around a little bit. Solana got very severely beaten down by the FTX saga, but it has an incredibly loyal user base. The levels for you to watch are definitely this 30.96 mark, very light structural support at 29.85, lighter, pretty light again at 29.10. It starts to get stronger around that 28.43 mark and the 27.29 mark. But always understand, if Bitcoin's coming up, Solana will come up too. Just be prepared for a resistance reflection at this 36 or 30.96 mark. In yesterday's video, I was saying just beware that this particular level on ADA between 25.39 and 25.75 could witness a really big squeeze, a short squeeze, and that's what we've seen. Bear in mind that there is a structural resistance level based on 2,119 days at 26.56. There's also structural support down here at that 25.12 mark and 24.60 mark, and all this comes from the monthly service indicator. Inside the service, I also explain the up, down, and neutral case paths using three-dimensional risk management for the month. Many thanks to everybody who watches and comments, and a big thank you to CryptoMonkey. CryptoMonkey said, "The CTKS method is truly magical. My favorite way to use it is for technical bounce trading." Thank you, my friend, for sharing. I mentioned that Doge had a very low percent return relative to the other cryptos, and I'll just explain why. It's all to do with CTKS structure. Doge has been underwater and is trying to get through this very solid area of resistance between 60.13 and 61.40. It's getting there, but it's still under resistance. This is one of the things that you'll find when you have the monthly service indicator. You can tell what's underwater, what's above water, what could have fresh air gaps either to the positive side or to the negative side. And we've seen just recently the US 10-year had really big positive air gaps to the upside. It's important to understand these concepts. If you have a lot of upward resistance, what actually occurs is it's hard for price to get through it. It will do this kind of action. Doge is doing pretty well because Bitcoin is doing well. As professionals, we're all about stacking probabilities inside the Tier 1, Tier 2, and Tier 3 charts. This is also a really positive sign. Let's have a look at Bitcoin Cash. The key levels are, we can see a lot of strong smart money resistance at that 253.80 mark, light resistance at that 246.0 mark, very nice structural support at 243.60, and a lower one, structural support at 238.40. A big thank you to TF Theta, who talked about a great explanation of recent indicative price compared with the CTKS method analysis. It shows why the CTKS method works as it incorporates all of price history. I can't imagine buying or selling without this kind of knowledge. Knowing is stress-free. Thank you, TF Theta. When I was lecturing first and second year statistics, one thing that was very important to inform my students of was statistical significance. Bitcoin Cash has been around for 2,249 days. If you took 365 of those days 1 year, you would get about 16% of price action. That means you would miss 84%. Could you make a decision on where to buy or sell with Bitcoin Cash, missing out 84% of the data? From a statistical point of view, the answer is it would be very risky. The concept is you want to push your risk down as much as humanly possible, and you want to identify where light resistance, not all resistance levels are the same. Some are strong, some are weak, some are bulletproof, some are thermonuclear, and the same goes with the support. But what you will typically see, all support and resistance lines, not on this channel, not on our community, but elsewhere, they're all the same weight, which means they're the same strength. This is not the case. Again, this is a statistical issue. The nice thing is that the service was developed for people who don't have the time to mark up the charts, and they can just pop the indicator on the chart and just press the eye and bingo, they're in. And I do monthly videos to explain how to interpret all of these lines. We've covered off a lot of the Tier 1, Tier 2 and Tier 3 charts in terms of the crypto market. But it's vitally important to keep in mind you need to look at the other ones as well. If you want to effectively stack probabilities, you just need to understand that financial markets work as one integrated whole. If you would like to subscribe to the monthly service, we have a very special Halloween special. Ooh, spooky. Just use the coupon code Halloween, or you can copy that link and go directly and have the coupon applied. Keeping your eyes on these levels is incredibly important. You need to look not only across crypto. If you're only in the crypto market, you must look at the stock market as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.